You know, when most people think about trading, their mind usually jumps to one of two extremes, right? Either you're picturing that frantic, high-stakes world of a day trader just glued to 6 different screens, or you're thinking about the super slow, patient game of a long-term investor. It often feels like it's got to be one or the other.
But what if we looked at it like a spectrum? Because on one end, you've got the intense heat of nonstop action, and on the other, you have the slow burn of waiting for years and years. And for a lot of folks, neither of those extremes feels quite right. Okay, let's really break this down. So over here, you have day trading. You're looking at a time frame of just minutes to hours. It's super high stress, you have to be constantly monitoring things, and the whole goal is to just skim these tiny, frequent profits. Then, way over on the other side, you've got long-term investing, a much, much calmer approach focused on years of growth, where you can practically set it and forget it.
So that kind of begs the question, right? Do you really have to choose between total burnout and, frankly, boredom? Is there some kind of happy medium, a balanced approach that could maybe capture the best of both worlds?
Well, it turns out there absolutely is. And that solution, that perfect middle ground, is called swing trading. It's a strategy that's really designed for people who want to be active in the market, but without letting it completely take over their lives.
So, what is it exactly? Well, swing trading is all about capturing the natural swings, the ups and downs in the market's price. We're not talking about minutes, and we're definitely not talking about years. The real sweet spot here is a time frame of days to maybe several weeks. And this is where you can really see how swing trading finds its groove, smack dab in the middle. You're holding positions just long enough to ride out those bigger, more meaningful trends that day traders are going to miss, but you're not locked into a position for years and years like a long-term investor. And you know what this all boils down to? Efficiency. By holding positions overnight and for several days, you give a trade the room it needs to breathe and grow, letting you capture a way more substantial piece of a price move. And maybe the best part, it requires significantly less minute-to-minute screen time than day trading. For sure. So how in the world does a swing trader actually do this? Well, let me tell you, it's not about guesswork or just having a gut feeling. Successful swing trading is a discipline, and it's built on a solid foundation of analysis. It's about having the right tools for the job.
The absolute core of that discipline is something called technical analysis. The best way to think about it is like you're learning to read the market's language, but you're doing it through charts. Swing traders use these charts to spot the direction of a trend, figure out how strong it is, and find those just right moments to jump in and out of a trade.
So what's in this toolkit? Let's take a quick peek at the essentials. You've got moving averages, which kind of smooth everything out so you can see the real trend. There's the RSI, which tells you if a stock might be getting a little overhyped or maybe oversold. You also have the MACD. That one's awesome for spotting changes in momentum. And finally, Bollinger Bands, which show you just how wild or calm the market is. Each tool gives you a different piece of the puzzle. But look, making money is awesome, but it's only half the battle. Just as important, maybe even more important, is protecting what you already have. And that's where smart risk management comes in. Think of it as your defense on the trading field. And playing good defense really comes down to a few simple rules. First, you always use a stop loss. This is your eject button, your non-negotiable exit plan if things go south. Second, you've got to size your positions wisely. Never, ever bet the whole farm on one single idea. And third, be smart about your timing. Staying away from major news events can help you sidestep all that chaotic, unpredictable price action.
All right, so we've covered the what and the how, but now let's talk about the who. Because honestly, a strategy is only as good as the person executing it, and having the right mindset is absolutely crucial for succeeding at swing trading.
You can really see the psychological difference right here. Day trading is this high-stress, all-out sprint. Long-term investing is more like a low-stress marathon. And swing trading, it lives in that balanced, moderate middle ground. It keeps you active and engaged, but without all the frantic stress of being chained to your desk all day. You know, at the end of the day, success in swing trading isn't about being the smartest person in the room. It's really about temperament. It demands the discipline to stick to your plan, the emotional control to not panic sell or get greedy, and yeah, the patience to just let your strategy play out, even with all the market's daily noise. Which brings us right to our final thought. Swing trading, it offers this really compelling balance of action and flexibility. But in return, it asks for a certain kind of discipline. So the real question isn't just about the strategy, it's about you. Do you have the patience and the cool-headedness to ride the swing?